Thanks, Haley, and good afternoon, everyone, and welcome to the latest webinar from Technology Business Research. My name is John Caucis, and I'm the lead analyst in TBR's Federal Information Technology Research practice. And today I'll be discussing our outlook for the federal IT marketplace in 2023. Before we begin, we'd like to solicit your opinion as to where the audience sees the federal market going. Do you believe that strong growth that we've witnessed the last couple of years in the federal IT market will continue through 2023? And we'll have the results of this poll at the end of the presentation today. So today I will be covering three primary topic areas. First, I'll discuss the expected IT budget trends in the federal sector for federal fiscal year 2023. Secondly, I'll cover the primary technologies driving federal IT investment. And then finally, I'll discuss the outlook for merger and acquisition in the federal IT space during 2023. Take a quick moment to orient everyone to the graphic here. This is going back to federal fiscal year, and the federal fiscal year ends on September 30th. Going back to federal fiscal year 2020, this is the IT budget, the total IT spend for the last three federal fiscal cycles, and projections based on our research as well as based on the research of other organizations following the federal IT market, where they see the market going in 2023 and 2024. As I mentioned, the U.S. federal government begins its current fiscal year on October 1st of the year, and the last full fiscal year, while estimates vary, in general, the IT budget in federal fiscal year 2022 was up roughly $20 billion and nearly 20% over the prior year. The Biden administration has clearly indicated that IT investment will be central to enhancing weaknesses in federal infrastructure and addressing concerns around climate change, for example. The recent pandemic, COVID-19, also exposed a wide range of vulnerabilities in federal IT systems and networks that will continue to be addressed by expanding technology spending. The initial budget request for federal fiscal year 2023 from the Biden administration does point to another year of solid, albeit decelerating, top-line growth for overall federal information technology spending. As we're approaching the halfway point of federal fiscal 2023, all signs from the federal IT vendors followed by TBR show that demand remains strong across the federal civilian, defense, and intelligence sectors. Furthermore, with a federal budget in place, agencies are expressing greater certainty that they will have the budget resources available to invest in their technology priorities, further enhancing federal IT contractors' outlook for strong, sustained demand in federal fiscal year 2023. TBR has also observed federal IT decision makers expressing confidence that their principal missions will receive budget support, particularly in technology areas, through the balance of the current federal fiscal year. So given the stated technology investment priorities of the Biden administration, the pace of IT spending growth in the prior budget and the IT-related objectives of the federal fiscal 2023 budget, we do not expect any significant scaling back of IT budgets, at least not for the next 1 to 2 federal fiscal years. In fact, there may be some small areas, for example, in R&D that may see some funding deceleration, but overall we see a strong pace of funding and funding growth continuing in the market through federal fiscal year 2023. From a technology standpoint, the priority areas across the federal sector include cloud, artificial intelligence or AI, big data, 5G and broadband connectivity, space-based technologies, electronic warfare, network interoperability in the defense sector, and mobility, among others. The federal IT budget for fiscal 2023 continues to promote migration to cost-effective, commercial cloud solutions. In other words, cloud solutions that have been developed and honed on in commercial markets. And we are seeing among the group of federal IT contractors that we follow, we are seeing and have observed over the last 2 years a significant acceleration in partnership activity, for example. Companies like General Dynamics Information Technology looking to their commercial counterparts in cloud and either forging new alliances or enhancing existing alliances with their commercial cloud counterparts. The federal IT budget, as I mentioned, continues to promote migration to commercial cloud solutions as well as shared services. And federal IT vendors can expect demand for cloud-based solutions to remain strong and on an upward trajectory throughout federal fiscal year 2023, and we believe for the next several years beyond that. From a sector standpoint, the Biden administration has continued implementing aggressive increases in civilian IT spending, significant expansion in cybersecurity outlays across both defense and non-defense sectors, and generous funding boosts for public health IT infrastructure and veterans care. IT spending growth will remain most robust in the civilian segment, where the White House has called for double-digit increases in IT spending in fiscal 2023 over fiscal 2022 levels. And this is a pattern that we expect will continue into federal fiscal year 2024. And in fact, as we have over the last several weeks, as the market, as the federal IT contractors that we track have begun to move into the reporting cycle for their fourth calendar quarter of 2022, and they've been tendering their results, we have seen this starting to play out in terms of accelerating civil sector spending, particularly in the health IT arena, on behalf of several contractors. Booz Allen Hamilton is one that comes to mind immediately. Underlying much of the robust demand on the civilian side is the simple fact that many civilian agencies still have a lot of work to do migrating legacy systems over to cloud, and cloud technologies will feature prominently in civilian sector IT modernization initiatives. Many other agencies in the civilian sector must still complete baseline modernization work of their underlying IT infrastructures in order to accommodate the future layering on of digital technologies. Billions of additional dollars have been allocated for cybersecurity activities, climate change, initiatives around clean energy, and public health care as well. On the DoD side, back-to-back and somewhat unexpected back-to-back years of DoD budget increases by the Biden administration have essentially fully mitigated any anxieties that arose after the 2020 election that the incoming administration would implement large defense spending cuts. And IT spending patterns amongst defense agencies are stabilizing. IT spending patterns amongst intelligence agencies are stabilizing after recent turbulence that extends back through 2020. During the first year of the Biden administration, federal IT contractors with significant footprints in the DoD were concerned that the emphasis on the president's domestic agenda would result in significant slowdowns or even cuts in defense spending in favor of spending on civilian programs, particularly in many of the aforementioned areas, climate change and healthcare IT. This scenario did not play out, as proposed DoD outlays in the president's fiscal 23 defense budget rose by tens of billions of dollars over the fiscal 2022 levels, including a roughly 2.3% increase for IT and cyberspace activities funding that will push total DoD IT spending based on estimates in 2023 to between $55 and $60 billion. And we believe that this is going to represent an increase of anywhere from 2 to 3% over the fiscal 22 levels. Enhancing IT-related space capabilities, for example, missile warning and navigation systems and advanced satellite communications, will also receive funding increases, and the DoD will also increasingly utilize artificial intelligence analytics, big data, and next-generation mapping technologies to study the national security implications of climate change. Other DoD areas expected to see funding growth include microelectronics, 5G most certainly, and hypersonics. Additionally, on cloud, total federal spending on cloud could surpass $16 billion in the current federal fiscal year, once again that being fiscal 23, which would be more than twice what federal cloud spending was just 4 years ago. The overall volume of baseline modernization of federal IT and communication systems will continue increasing in 2023, fiscal 23, to accommodate broad-based and agency-wide adoption of cloud infrastructures, as well as zero trust security, software-defined solutions, and next-generation communications technologies like 5G. Many federal departments remain locked into monolithic legacy IT systems that cannot accommodate digital modernization. Agencies seeking to overhaul their IT infrastructures and migrate more data and applications to the cloud will also use application programming interfaces, APIs, with increasing frequency, and will need guidance on developing API strategies from their federal IT partners. Agencies have become more amenable to the notion that commercial cloud services, as I mentioned a few moments ago, commercial cloud services have security advantages over on-premise federal systems, but security will remain a paramount pre-migration concern for agency IT decision makers in 2023, particularly as large swaths of the federal labor force in hybrid or remote environments, distributed environments, continues, and as the number of mobile devices connecting to federal IT networks proliferates as a result of this and other factors. Federal IT vendors will also be called upon by their agency clients in fiscal 23 to assist in training federal IT workers on how to use new cloud and digital technologies while also complying with regulatory requirements during cloud migrations. Cybersecurity enhancement initiatives will receive particular emphasis across most federal agencies, and of course this was driven largely by the executive order in 2021, 14028 by the Biden administration, which sought to prevent security intrusions into federal IT networks, intrusions that have been accelerating in frequency and sophistication over the last several years. Zero trust security looks to feature heavily in civilian agency IT cyber strategies to secure supply chains, improve incident response and reporting, and minimize workforce-related security risks. Like their counterparts in the civilian sector, DoD agencies are looking to adopt zero trust approaches to shore up the security of enterprise IT and communications networks and other critical military infrastructures. To put a few numbers around all of this, we estimate that in fiscal 22, civilian agencies requested nearly $11 billion for cybersecurity projects, which itself was up over 26% over the prior year, while the DoD asked for over $11 billion, which itself was up over 14% over the prior year levels for cybersecurity initiatives. Cyber-related budget allocations in fiscal 23 continue to grow at a similar pace. For example, the Cybersecurity and Infrastructure Security Agency, CISA, a division of the Department of Homeland Security, has itself requested almost $3 billion for cybersecurity initiatives in fiscal 23, and this represents an increase of over $330 million over the prior year levels. As in fiscal 22, in fiscal 23, we expect civil departments will prioritize, in addition to cybersecurity, supply chain risk management, incident response and reporting, as well as cyber initiatives, cyber programs, and solutions that minimize employee risk with an increasingly distributed workforce, as well as more devices, expanding the threat surface for civilian agencies. DoD agencies will enhance the security of their critical military infrastructures and increase support for cyber mission teams. New and expanded investment is expected in zero trust architectures across both sectors, both the DoD and civilian, and certainly we expect, even though it's not publicly disclosed, we expect the same will transpire in the intelligence community. The competition for cybersecurity talent will also intensify during 2023, especially for individuals with security clearances. And this is a pattern that we have seen over the last 3 years. This is the single most competitive market for labor in federal technology that really has ever been. I'm hearing that from contractors across the board. And human resource strategies, particularly around recruiting and retention, have risen to the level of being strategic enablers. They're key planks in the overall growth and expansion strategies of every federal IT contractor that I track. Federal IT providers are looking to hire more experienced cyber leaders from the DoD, from the intelligence community, from the Department of Justice, for example. Federal IT vendors, we expect, will also ramp up efforts to forge solutions and strategic partnerships with their peers on the commercial side, as well as up and coming peers in the federal market, that folks that have unique and innovative security capabilities. Vendors like Booz Allen and Raytheon Technologies stood up venture capital investment arms in the prior year, and we expect in 2022, and we expect more federal technology contractors to follow suit, leveraging this as one way to build and expand their networks of partners with transformational cybersecurity and digital technologies. So in short, against a backdrop of record levels of technology investment spanning both the civilian and defense sectors, federal IT contractors are confident that the federal IT market will remain growth-friendly through 2023. Finally, I wanted to make some comments about the federal M&A market. If you wind the clock back to 2018, from 2018 through 2021, federal IT contractors were highly active in terms of acquisitions, acquiring a multitude of smaller peers. This period also saw several acquisitions and mergers of the strategic variety. For example, Raytheon Technologies buying United Technologies, SAIC's acquisition of Agility, and General Dynamics Information Technology acquiring CSRA. The market has changed, though, and in 2022, federal IT vendors entered with strong M&A ambitions, thanks to the abundant availability of inexpensive debt financing and generally strong liquidity levels. However, inflationary pressures increased, along with supply chain disruptions, particularly in the global supply of computing inputs to manufacturing processes, and this is particularly the case in the DoD side. But the outlook for the overall macroeconomic environment remained generally positive. 2022 did also usher in sharp increases in inflation and interest rates as an inflationary countermeasure, which, following this, high stock market volatility, the threat of new waves of COVID-19, the Russian invasion of Ukraine, all of these factors then kind of put the damper on M&A activity in the federal IT marketplace. And we've observed that. We have observed some acquisitions, but certainly not the pace that we had in that prior year, 3-year period from 2018 to 2021. And we certainly haven't seen the strategic acquisitions such as those that I mentioned a few minutes ago. Federal IT contractors, undoubtedly anticipating negative balance sheet impacts of high debt leverage, began shifting capital deployment away from M&A, although their internal M&A scouting functions remained active and on the hunt for new acquisition candidates. But their capital deployment strategy shifted towards using free cash to tidy up their balance sheet, mostly by using debt leverage, rewarding shareholders in the form of stock buybacks, and investing internally to generate future margin benefits. And this was all done, once again, in lieu of M&A. Some federal IT executives also expressed a lack of enthusiasm about the availability of attractive M&A candidates, while others indicated that acquisitions may also take a backseat to venture investments in smaller peers or startups with innovative solutions in many of the aforementioned technology areas: artificial intelligence, analytics, advanced communication solutions, cloud, and next-generation security capabilities, such as cognitive cyber. Potential buyers might also be waiting for record valuations to ebb. Antitrust litigation by the Department of Justice may also have had a chilling effect on strategic M&A towards the end of 2022. However, the most recent case, Booz Allen's acquisition of Everwatch, which was challenged by the DOJ, was resolved in Booz Allen's favor. While the overall pace of M&A activity in the federal IT space may change little in 2023 from 2022, vendors have expressed that they remain opportunistic regarding acquisitions, seeking strategically accelerating purchases that will broaden and deepen their relationships with federal agencies and provide capabilities in advanced technologies. A couple of questions have come through here. First, if the vendors that we track can't get enough cybersecurity talent, will they partner with other IT services vendors like Accenture? Will the need for cybersecurity talent impact the broader partnering and alliance ecosystem? I think that's absolutely the case, and I think that the federal IT vendors, many of them saw the labor market challenges on the horizon back in 2020, and it was really towards the end of 2020 that we saw a concentrated effort on behalf of several of the federal IT contractors that we follow to shore up existing alliances with their commercial counterparts and or forge new alliances with the leading technology players on the commercial side. So will they leverage that to address the talent shortage? Absolutely. Another question has come through. Of the federal IT vendors that you track, which do you think are best positioned for 2023? Which is a great question. As we start to see the full year results or the fourth quarter results from several vendors that have been tendered over the last several weeks, three vendors come to mind immediately. First and foremost is Booz Allen Hamilton. They posted exceptional results in the fourth calendar quarter of 2022. In fact, results that were so strong that they ratcheted up their guidance for their fiscal year, which once again concludes on March 31st. They are now expecting, and I'm expecting, that they could put in double-digit growth for their fiscal 2023. It's a clear indicator to me that their three-year growth strategy that they launched over a year ago has been effective. They've also made effective acquisitions and effectively leveraged those acquisitions. They're not done making acquisitions, so if there is someone who will buck the trend of slower M&A, it would certainly be Booz Allen Hamilton. They won't be alone, though. I think we should also keep our eye on folks like Accenture, CGI Federal. IBM just made an acquisition to expand their footprint in the federal IT market. Certainly another illustration of how robust the market is. There's plenty of headroom for growth for all of the vendors that we track, certainly. So first and foremost, Booz Allen Hamilton. Leidos comes to mind. Secondly, they are the largest traditional systems integrator, but they also have a more diversified business model as a result of recent acquisitions. Dynetics in the R&D space, they made an acquisition to expand internationally, but their core federal business remains strong. They have an exceptionally strong health IT business, so that is well aligned with the priorities, the civil and health IT priorities of the Biden administration. And I would also put Accenture Federal on that list. They are a perennial growth leader in our federal IT benchmark. Another company that has certainly has the benefit of having the mothership, if you will, of Accenture Global backing them fiscally, not only with the fiscal backing, but also with the solutions that have been tried and tested on the civilian, in the commercial markets. I expect that they will also remain on the hunt for acquisitions and are likely to make additional buys, like the purchase they made recently of Novetta, which they have effectively leveraged to expand their footprint in the DoD. And other vendors to keep an eye on in 2023, I mentioned CGI Federal. They're gaining ground with their portfolio of proprietary intellectual property-based solutions. I would also keep an eye on SAIC. They appear to be pivoting effectively away from their legacy, which has been more towards the bottom of the stack. They're a vendor who they want to be a vendor agnostic provider, an orchestrator of cloud solutions. They've shored up alliances. They've introduced new solutions. So somebody to keep an eye on in 2023 as well. So the results of our poll, it appears that 2/3 of you believe that the federal IT market will remain robust in 2023. The remainder aren't quite sure. I would certainly agree with the affirmative, and I think we've laid out the case in the presentation today for continued strong growth in federal IT in 2023. That brings us to the end. If there are any questions, please send them through on the chat function, or you can forward them directly to me. My email address is here on screen, and I thank you for tuning in today.
Thanks, John. It looks like there's a new question in the chat. What factors could change your mind about growth?
Macroeconomic factors. If we do slide into a serious recession that has significant negative impacts on tax revenue, that would be a factor. There has been some consternation about a return to what we saw primarily through the 2010 decade. The environment, it was known as LPTA, which is short for lowest price technically acceptable contracting. Basically competing on price. Now it's been several years since we've seen that environment. Although there have been some concerns that if there are budget pressures that we could return to that, but I don't see that happening in 2023. I think we have to look further out to perhaps the end of 2024 for any significant scale back. And even then, I don't believe that there's going to be significant cuts to federal IT spending. We have another question. How often do we publish our syndicated reports on federal IT services? We publish a quarterly report, the Federal IT Benchmark. That, as I mentioned, that is published every quarter. The last one, covering the third calendar quarter of 2022, was published at the beginning of January. Our next benchmark, covering the fourth calendar quarter of 2022, will publish in early to mid-April. It's roughly on that same cadence. The benchmark after that will be at the end of June. The following one will be sometime in the September timeframe, and then the last one for the year will be in the mid to late December timeframe, or early January of next year. We publish reports on 8 companies. The 2 defense primes, Raytheon Intelligence and Space, General Dynamics Technologies, which includes both the information technology and the mission systems group, as well as Booz Allen Hamilton, Leidos, CACI, Maximus, SAIC. I know I'm forgetting a few, but that's just a short list of the companies that we track. And those come out on a semi-annual basis. During the quarter in which we publish a full report, we also do what is known as an initial response the day of the company's earnings. So you can expect to see the most recent ones that we published were on Raytheon and General Dynamics Technologies. Our next one will be on SAIC roughly the end of March. We also have a couple of reports that we publish on a semi-annual basis, not tied to earnings because the companies themselves are privately held. Mantech and Periton, our analyst, James Wichert, is responsible for the content of those reports. And we are considering an additional expansion at this point of our coverage of the federal IT vendors. So I hope that gives a good quick overview of TBR's coverage of the federal IT market.
Great. Thank you so much, John. And thank you, everybody. If anybody has any additional questions, please feel free to reach out to John with any follow-ups. If you have a few moments, it would be greatly appreciated if you could fill out the survey on your screen. The replay version of today's webcast will be available after the event and will be sent out to all of you via email. To view a list of our upcoming and past webinars, please visit tbri.com and be sure to join us on Thursday, March 9th for Unpacking the Latest IT Services, Digital Transformation, and Consulting Trends, 2023 Outlook and Insights from TBR's Research. Thank you all and have a great rest of your day.